Good evening, this is Melissa with thestockswoosh.com and happy Valentine's Day. This is Rax. This is play of the day and play of the week. There's been so many plays of the week this week. It's really hard to keep track because this has been the best week of the year so far, to be honest. This has been the best week of the year so far in 2013 for gap plays, for huge, beautiful, fabulous, nice, solid red bars and gaps. Really, the market has been just cooperating so beautifully with these gaps. Not in and of its own accord, but the gaps have been working beautifully. So let's go over it. Rax, gap down. This happened on Wednesday, and you know what? It went right to the target. What more can you ask for? I said in the morning, this is 60 bucks, $60, there it is. I did say even 60, 50, $60. It actually went past it. 59.54. In fact, let's find it. There. No. It was 58.54. Wait a minute. Actually went past 59.84. 59.50 was the open of this bar here. There. That's where it went. See that? Look at that. Boy, look at that thing. These charts are beautiful. They are so beautiful. You don't find this kind of price action, this specification, this detail in anything other than great gaps, golden gaps, gaps that rate high on my rating point system. This is the kind of things that work according to the numbers, and this is the kind of things you want to play. How can you play anything else? Why even play anything else? Why get caught up in the jerkiness of the market? Just play great gaps, gaps that rate high in the day. Gaps that I pick at 8 o'clock in the morning that I like to work, and I play them, and they have bars like this. Just that's all that you need to do to make money. People say, well, do you do this? Do you do that? And I say, no. Why? All I have to do is this. I get 2 of these a week. That's all I have to do. 1 of these a week is all I have to do, but 2 of these a week is all I have to do. And this week we've had these like every day of the week, like 2 we've had every day of the week this week. So, you know, that's earnings season, and it's not over, okay? Earnings season carries through till March, so really just we're in a good mood. Really happy about the way things are going lately. I'm in love with my trading. I'm in love with the market. I'm in love with gaps. So happy Valentine's Day to me. All right, let's look at this. When I saw this in the morning, it was like around here, okay? It was like around here, and I said it needed, no, it was up here. And I said it needed more. And then it started coming down. I said, you know, it needs more. I said, it needs more. It needs more. It needs more. I want to see a break. And then as I'm saying that, it started to really break. And I said, you know, I actually said, how do I want this to set up on the open? I said, you know what? I'm going to give this 15 minutes to set up. I'm going to give this a full 15 minutes to set up and rally if it wants to. Do you know that it couldn't even do that? It could not get a breath to save its life. Let's look here exactly what it did. 65.40. Okay, let me find it. Here. Do you see what it did right there? There it is. The open of this bar here is 65.41, and that's what it did. Once again, perfect numbers, perfect play. Looks like it's gapping to no man's land, and the numbers are absolutely fantastic. Fantastic. Had some a little bit continuation today, but really didn't break much under the low here. I think this is done for now. It's a rest. But it is, the chart is lower. This is so damaged now after this gap the other day. Let's just look here. Here's the next number, 55.50, then 54.60-ish, 54.50. As soon as this thing breaks under here, breaks under 53. Here's the swing trade, core trade on this. It's 45 here, 45.50. That's it. That is it. This chart is damaged. The real entry, though, for the swing core trade was back here in the beginning of January. It was a sign of things to come. This gap here was an excellent gap and could have been played short. And if you did this gap, you made money. And this was the entry. And you know, see, it never went above it. So this was the entry to go swing trade core. This gap is damaging, however, because it was so huge, okay? It may wiggle and jiggle until it goes. It may wiggle and jiggle until it goes. People keep talking, well, things fill gaps, things fill gaps. That is not a strategy. That doesn't work. Don't ever trade like that. Sometimes things wiggle and jiggle back to an area, but they don't fill the gap, all right? It just doesn't work. In fact, if you're looking for this gap fill, which is not even that big, you're not going to see it for a long time, if ever. So don't trade like that. This will wiggle and jiggle, but it's only going to wiggle and jiggle in here and set up and go lower. Because of what happened and the move yesterday, I think it's going to wiggle and jiggle a little before it gets down, but really, this is the target down here. I mean, that is there. I mean, it's so, so clear. It's kind of like the bigger target. I've been looking at an apple, and everybody says, oh, that's crazy. No, you know, it's when the target is clear and when it's screaming at me, then I'm not going to deny it. I always say, let the stock tell me it's good. Let the stock tell me the target. Let the stock tell me it's ready to be taken, not force it. That's a place that you've got to get with your trading. And again, part of this has to do with the mentality. You know, I'm doing a trading psychology series, and I'm starting this month. The first class is February 24th. It's called Wealth Manifestation. Got to get your head on right about this stuff, or no matter what you do, things aren't gonna jive, okay? Because it's about your mental conditioning with things and seeing things for what they really are, not for what you think that they are to force them. See things for what they are, not what you're trying to force it to be. Does that make any sense? Okay. So the bottom line is, this was a great gap. And this entry on this too was just, here it is. So what's the play on this? Opens, and I was going to give it 15 minutes. I said 15 minutes, I'm going to give this thing to sit up. 15 minutes, I'm going to give this to rally. 15 minutes. No green, no green, no green. Pop, pop, hold, you're in. This is aggressive, but this has to be the entry. Why? Can anyone tell me why? Because it already went, and it shouldn't go anymore, and it's a reversal time. 9:35 is a reversal time. And quite frankly, the gap was so big that if this chooses to go over this doji bar, then it's going to rally, and therefore there's no point in putting the stop over the high of the day. Let it rally and retake it if you're going to short it. Okay? So you must play this aggressively to get the proper risk to reward. And it was 10 cents. And you know what? In this one trade, it dropped $2.50. You do the numbers, okay? You do the numbers. What I actually didn't even do what the risk to reward was on this, because I always just, my risk to reward expectations are not normal compared to other people. But the bottom line is that you know, you've got to have that with your trading. If you don't have that with your trading, then what's the point of doing anything? You know what I'm saying? Like, how are you ever going to get big trades if you don't trade aggressively with a good gap and with a proper entry and a proper stop? You can't cheat the entry. You can't force the entry. If you don't trade with precision and detail, you're never going to get plays that pay you like, you know, 20, 25 Rs. You're just not going to get them. How are you going to get them? You're not. Okay. So the bottom line is, you've got to see it for what it is and take it. Take it when it screams at you, it's ready to go. And I was going to let this rally. What happened here was the stock opened and showed me that it was so weak that it couldn't get a breath. This was so weak that nobody wanted to get out. People were shorting this pre-market and they didn't care. They said, we don't care, we're not getting out because $60 is a target, we're staying in this. And the people that were selling out of it pushed it down too. And this is pushing down and this is pushing down, and it makes a scoop and it drops. And you can't take this as a bad play. If you grab this here, it's cheat the entry. Here you could have taken a second entry, and here a stop would have still had to be over this base. Here's the proper entry, here's the proper stop. Here you're getting a worse price and you still have to use the same stop. Here this isn't anything at all. If you take this, you're cheating it. Chances of it backing up on you are not working out, are not good, because the stop has to be here. You can say everything you want, but the chances of you've got to take a good gap with a good play. That's how you make money. A great gap and a great play. A good gap and a good play. You can take stuff that isn't great sometimes to get good plays in it if you really know what you're doing. I occasionally can do that. But it's like impossible to get a good gap and then take a crappy entry. You're going to lose money even though the thing might go red on the day if you short it. I know that sounds insane, but that's the truth. If you take a bad entry on something, even if it goes red on the day and it works as a short on the day, if your entry's bad, you can lose money in it even if you short it, even if it's red on the day. The entry counts. You can't take tight, precise entries like I do with tiny stops unless the gap is good. But you've got to get good quality entries with tight stops. And you can't take them on anything. You can only take them on good gaps. And this was a good example of it. And it just was huge. Then you're watching it to see if you can get anything more out of it, because obviously the target's $6. You have to wait. You have to wait then for it to set up properly. And this was, let me go back here. So say you took the first play and got the drop. You could have gone back in here. However, if you did this, you have to take a bigger stop. There's no way around it. You're up a lot of money on the day here. You can do it here. The stop's like 45 cents with the spread, and you get in it. And if you can hold it down to $60, good for you. Okay, you're almost actually at the target here with this. So it's kind of hard to hold it down even more because this, again, was such a nice play in here. But say you wanted to hold it to the full target. You know, I like chunking and chunking, but say you wanted to hold it to the first target, you've got to start to have a management plan for that with the risk to reward. In other words, take half off if you do the second play and don't want to get out of the whole thing. Take half off and then manage the rest down and pivots on the 5. And you've got to get there properly. The top numbers for this was 48. So this did work out and stayed under where you would have had the pivot. But you can't let this rallying against you if you're still in some of this trade. This was a lot to get back, actually, if you didn't get out of this full in here. Rally back $1.50. If you held it, okay, if you held the whole thing or half of it or whatever you wanted to hold, really to try to squeeze out more, which it did drop past the target of $60, you had to wait really until the afternoon, late in the afternoon, until 3 o'clock. As it turns out, it paid out. You could have taken an entry here, right in here on the 15-minute. If you got out of the whole thing, you could have gotten back in here. I prefer to do that sometimes. Take one, get the drop. Take one, get the drop. Take another to get the drop. I prefer to do that to chunk it, okay? Because you never know if it's going to reset up again. You never know how much it's going to rally back. You never know for sure if it's going to get to the target. This did play out beautifully, though. No surprise. 1, 2, 3, 4, 5. 3 to 5 red bars down. 3 to 5 red bars down. Look at how beautiful that 50-minute chart is. This was a beautiful gap. This actually is the play of the week. You know, hands down. As far as the first play goes, it has to be. I mean, to take a stop here, you know, a 10-cent stop and get a $2.50 move, you don't get these kinds of things every day. And it also went past the target on the daily chart. And it also is a good trade, you know, to do swing and core. Here was the first entry here. You can get in it here still today. But you're going to wiggle and jiggle a little bit till it goes, but the target is $45. $45, this thing is going to lose half its value by the time it gets to the target. This is an incredible short, a great chart, and a beautiful example of really everything that I teach. If you are interested in getting these live gap calls, email me about joining my Stock Swoosh trading room. And if you're interested in learning more information about how to find these gaps, email me at melissa@thestockswoosh.com because I teach a class on how to find these gaps and rate them to get these kind of things. And I teach how to take these entries in the class as well. I'm doing a trading psychology class, the first one of its kind. It's a series that I'm starting for this year for 2013. And the first class in the series is going to be this coming month on February 24th from 9 a.m. to 1 p.m. Eastern Time. The cost is $350, and if you sign up and join that class, you will get 1 month free in the Stock Swoosh trading room, in which case you would get calls like this and so many other calls that I made this week that were really nice gaps. So happy Valentine's Day, everyone. I hope that you have a wonderful, fabulous, beautiful evening. Enjoy yourselves. Have a great night. And if you're interested, contact me at melissa@thestockswoosh.com. Thanks and have a great night.